The week of January 20th to 24th, 2025, is poised to influence the Forex market significantly, with several key events and economic indicators scheduled for release. Here's an overview of the anticipated developments. Key events. Monday, January 20th. U.S. presidential inauguration. President-elect Donald Trump will be inaugurated, marking the beginning of his presidency. Markets are closely watching for any immediate executive actions or policy shifts, particularly regarding trade negotiations, tax reforms, and global economic positioning. Any announcements could significantly impact currency markets, especially for USD pairs, as traders seek clarity on U.S. economic policies moving forward. Martin Luther King Jr. Day, U.S. financial markets, including banks, stock exchanges, and major trading platforms, will remain closed, leading to significantly reduced trading activity. This reduced liquidity can result in wider spreads and greater volatility in currency pairs. Traders should be cautious, as thinner market conditions may lead to erratic price movements, creating potential risks for short-term trades. Tuesday, January 21st. UK labour market data. The UK will release critical labour market statistics, including employment figures, the unemployment rate, and wage growth data. These metrics provide a detailed view of the nation's economic health and its ability to sustain growth. Employment figures. Higher employment levels indicate economic strength and can support consumer spending, contributing to GDP growth. Conversely, a decline in employment may raise concerns about economic slowdown. Unemployment rate. A lower unemployment rate signals a strong labour market, which could bolster investor confidence in the UK economy. An unexpected rise in unemployment, however, may weaken sentiment toward the British pound. Wage growth. This metric is closely watched as it directly impacts consumer purchasing power and inflation. Higher than expected wage growth could increase inflationary pressures, prompting speculation about potential monetary tightening by the Bank of England, BoE. Lower wage growth might dampen inflation expectations, influencing the BoE's policy stance. Thursday, January 23rd. U.S. jobless claims. The U.S. Department of Labor will release the weekly jobless claims report. This data provides insights into the health of the labor market by tracking the number of people filing for unemployment benefits. A higher-than-expected reading could indicate weaker labor market conditions, potentially leading to concerns over economic growth and influencing the U.S. dollar's valuation. Conversely, a lower-than-expected figure may signal a tightening labor market, supporting the case for continued interest rate stability or hikes, which could strengthen the dollar. Traders will watch this release closely, as jobless claims data often impacts short-term market sentiment and USD currency pairs. Japan's Consumer Price Index, CPI. Japan will announce its national CPI, offering critical insights into the country's inflation trends. The CPI data measures changes in the prices of goods and services and is a key indicator of inflationary pressure in Japan's economy. A higher-than-expected CPI could suggest rising inflation, potentially leading the Bank of Japan, BOJ, to tighten monetary policy by reducing stimulus measures. On the other hand, a weaker CPI reading may reinforce expectations for continued accommodative monetary policy. Inflation data is a major driver for JPY movements, and any surprises could lead to volatility in the currency market, impacting JPY pairs. Friday, January 24th. Preliminary Purchasing Managers Indexes, PMIs, Germany and Eurozone. The flash PMI reports for Germany and the broader Eurozone will be released, offering key insights into economic activity across the manufacturing and services sectors. A stronger-than-expected PMI reading could signal growth and business expansion, while a weaker figure may indicate contraction or slowing economic momentum. These data points are closely watched by investors, as PMIs help gauge the health of the Eurozone economy and can influence the euro's valuation. Traders will pay attention to both the manufacturing and services PMIs, as combined readings provide a more comprehensive view of economic conditions. United Kingdom PMI. The UK will release its PMI figures, which measure the level of business activity across the manufacturing and services sectors. A higher PMI reading suggests expansion, while a lower figure may signal contraction. These results are critical for understanding economic momentum in the UK and can impact the British pound. Traders will watch this release closely, as it provides valuable insights into the performance of key sectors such as manufacturing and services, which are crucial for the UK economy. United States PMI. The US will release its preliminary PMI data, providing a snapshot of economic conditions across the manufacturing and services sectors. A stronger than expected PMI reading could suggest expanding economic activity, while a weaker PMI could point to slowing growth. PMIs are key indicators of economic health, and they often impact the US dollar's valuation. These reports help traders assess the pace of economic growth in the US and can influence USD currency pairs based on the sectoral performance. Bank news and monetary policy. Federal Reserve Fed recent statements from Fed officials suggest a cautious and measured approach to further interest rate cuts in 2025. The Fed is maintaining a focus on price stability and employment levels, aiming to balance economic growth without triggering inflationary pressures. This cautious stance may influence the US dollar's strength, as the market anticipates stable monetary conditions. If inflation remains contained, the Fed may hold rates steady or make only slight adjustments, supporting the USD. Conversely, weaker economic data could reinforce expectations for rate cuts, which could lead to USD depreciation. Bank of Japan, BOJ. The BOJ is scheduled to announce its monetary policy decision on January 24. Market participants are closely watching for any potential shift in policy, with attention on the possibility of rate hikes. Inflation in Japan has been steadily rising, fueling speculation that the BOJ could adjust its ultra-accommodative monetary stance. However, economic growth remains sluggish, and wage growth continues to be subdued. Any major policy changes could impact the JPY, and traders will be keen on the bank's next steps, including potential tweaks to its yield curve control and other stimulus measures.